Hello guys and welcome to Daily Market Movements. Welcome to another episode of Indices Watch. In today's video, as always, we're going to be looking at the NASDAQ 100 and the S&P 500 price chart. Let's kick it off with the S&P 500. Past couple of sessions, we have been under pressure here in both indices, as well as the NASDAQ 100, more so the NASDAQ 100. It was only a few episodes ago when I was warning you all to not buy the tops here in the indices. We are looking very overextended, very expensive up at these high levels, especially in the NASDAQ 100. And, my job is to come onto YouTube and try and help the retail traders, help those who have just started trading, in the past 12 to 18 months. And, warn you with my best capabilities when I think volatility, whether it be to the downside or to the upside, is about to happen. And I come on here a few episodes ago and I said, guys, times are about to get very difficult for these markets. We've seen a huge rally in the S&P 500 of 116%, and over in the NASDAQ 100 we've seen an even bigger rally. I think it's around 143%, if I remember correctly. 152%, so even more than what I thought. These are massive gains. In fact, they're unseen. If we zoom out here to the daily, let's actually go monthly chart here for the NASDAQ 100. It just shows you this goes back to 1998, and look how steep of a incline we have had over the past couple. Past couple of months, the last 12 to 18 months. We've had this slow grind towards the upside, and in fact, that wasn't even a slow grind. That was a very nice incline towards the upside. And we have just absolutely, exploded. And, when we had that 30% decline here on the NASDAQ 100, that was back in March 2020 when, of course, COVID first hit. We went and touched that 50-day EMA. Well, if we were to go down and touch the 50-day EMA now, actually, I've got that the wrong way around. Let's just see how much of a decline that would be. That would represent a 37% decline. So there's many investors out there saying, a big bear market in 2022 is going to occur. We could see an 80% crash. Do I believe that's going to happen? No, I do not believe that's going to happen. And the reason being is because the top 1% in America currently own 89% of all stocks in the US stock market. Okay, so the stock market has got so big now that it's too big to fail. And that is exactly what we saw back in March 2020. When the stock market really started to look under pressure and trading sessions were having to be halted, the indices had fallen 30%. That's when the Federal Reserve come in, Jerome Powell, and announced $120 billion of money would be printed and injected into the financial markets. And how did the markets react? Well, we had 116% gain in the S&P 500 and 150% gain in the NASDAQ 100. But that's just a kind of an overview as to how the markets have performed in the past 12 to 18 months. But the big question is, where do we go from here? And, it's very clear. I've made it very clear to you all that I'm going to be extremely transparent with regards to my positions here in the S&P 500 and the NASDAQ 100. In fact, if you would like to learn my strategies and know my entry and exit plans, then you can go and subscribe to my streaming service. I'm going to leave a little clip towards the end of this video where you can, understand and learn how to join my pro Telegram chat and, of course, see my more in-depth videos. But, on YouTube, I'm just going to give a quick brief summary that I do not currently own any positions in NASDAQ 100 and S&P 500, and that's because I believe times are about to get very tricky. I do anticipate interest rates to be hiked earlier than anticipated. We're seeing inflation rise rather dramatically as well. We're seeing a tapering process as well. $15 billion will start to be tapered in December. That's next month. And that is going to really hurt these high valuation stocks that you see, especially in the NASDAQ 100. If I go back to the daily chart, the majority of these stocks have extremely high valuations. We have the likes of Apple, which is valued at around 2.5 trillion, Microsoft 2.5 trillion, Facebook has a valuation over 1 trillion, Tesla has a valuation up at around 1.2 trillion. It is incredible, and that's because interest rates are near to 0%. But once they do start to get hiked, that is going to really hurt the projected future cash flows of these companies, and investors are then going to slash their valuation forecast. And of course, that's going to give back something here on the NASDAQ 100 and the S&P 500. But that's only short term. Medium to long term, I do anticipate a continuation of this bull cycle. I'm not one of these investors that's saying, I anticipate the NASDAQ 100 to go and break below the March lows of 2020. That is not what I'm trying to say here. What I am trying to say is that, the simple math here of buying the NASDAQ 100 at 16,200 to, maybe trade up towards 17,000. That would be a fantastic move into the year end if we were to go to 17,000. But that only represents a 4.43% move higher than where we're currently trading now, where it would be very easy for the NASDAQ 100 to fall down to that 50-day EMA, which is around 3.5%. So not the best risk management. And this was something what I was saying the other day, to not buy the NASDAQ 100 up here, because look, we had a 5% fall down to the 50-day EMA. And what have we done in the past couple of sessions? We have in fact fallen lower. So that risk towards the downside has decreased, and I did say around a 50-day EMA, that would be an area where I would be interested to put a few cheeky bids. But even if we fell to the trend line, that's an 8.39% move lower than where we're currently trading now, and the 200-day EMA is over 10% of a decline from the current level. So the risk management just isn't there at this moment in time. If we got down to that 200-day EMA, this would be the fantastic buying opportunity. This area here, you could play some cheeky bids, but the majority of you are probably buying and selling CFDs, and of course these products are leveraged. And one thing that I will tell you as retail traders is that these brokers make money when you lose money. When you're buying shares or buying CFDs on the majority of your brokers, whether that's XTB, Robinhood, IG, all these brokers are betting against you. They make money when you lose money, and they give you as much leverage as possible, and they want you to lose money. If you put $10,000 onto your trading accounts and you're buying the NASDAQ 100 up at these highs, and when NASDAQ 100 goes down towards that 200-day EMA, well, then you are losing your $10,000, especially if you're trading on leverage. And when you lose $10,000, your brokers gain. So please, guys, my job is to come on here and to give you as much warning as possible, as much advice as possible. Of course, not financial advice. I want you to do your own due diligence before entering a trade. But what I am trying to warn you is don't be buying these tops. They're not worth it from a percentage perspective. The risk management is just not there. Wait for those pullbacks. Whatever emails or mail lists that your brokers are sending you saying, the NASDAQ 100 is expected to rally up or past 17,000. They make money when you trade. They make money when you lose money as well. So please always be aware of that. Do not be chasing these tops. They are not worth it. And as I mentioned, times are about to get very, very tricky with regards to the tapering process of the $120 billion that's currently being injected every single month in the financial markets. That's why we keep seeing these dips get bought up. But soon that time will come where that massive dip will come, and it will wipe out many traders' trading accounts. So please be very cautious. Sometimes the best trade is no trade at all. But as I just mentioned, at this moment in time, I have no money invested in the S&P 500 and the NASDAQ 100. And as soon as I do invest money, I will be the first to jump onto YouTube and to let you all know. And of course, my clients over on the streaming service, I will share my entry and exit strategies with you all. But I thought I would just come on here today just to have a little catch up with regards to the S&P 500 and the NASDAQ 100. As I just mentioned at the start of this video, I advised you at the beginning of this week not to buy these indices, and this is why, because we have seen a down movement, and I do anticipate a further movement as we go into next month, and of course as we go into the new year. But stocks at this moment in time are looking incredibly overbought, and I do not like technology as we go into Christmas. I do believe a big pullback is coming, whether it be to the 50-day EMA, the trend line, or the 200-day EMA, but I'm very certain it is coming. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.